Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm ranking the 40 stocks of the French CAC 40 index. And the CAC 40 index, the CAC, stands for Cotation Assistée en Continu. And it's actually an index that is a benchmark for the French market. And it contains the 40 most significant stocks among the largest market cap stocks on Euronext Paris. And ArcelorMittal is in it as well, and it starts with LU, so LU, and yeah, it's actually on Euronext Amsterdam. I didn't find it on Euronext Paris. I don't know about that one, but it's definitely in the CAC 40 index, so I'm including it in the list for sure. And I also, yeah, I know ArcelorMittal because they have a factory in Ghent as well, so I know them pretty well. And the ranking according to market cap, you can see it here. So it's ranked from biggest to the smallest, and every page contains 10 stocks. So you can pause the video and write everything down if you like that. So here you can see, yeah, Louis Vuitton, Moet Hennessy, with a market capitalization of 336.77 billion. So more than 100 billion larger than the biggest firm in Switzerland, Nestle. And Hermes is actually a little bit smaller than Nestle and just as big as Roche right now. So yeah, France is definitely a country with a lot of big firms. So that's really interesting if you want to invest in larger firms. Then you have L'Oréal, TotalEnergies, Schneider Electric, Sanofi, Airbus, EssilorLuxottica, Air Liquide, and Safran. So if you look at the PE ratios for LVMH, 24.15, that's actually not too bad. Hermes, in the contrary, there it's more than double, 51. So that is one that I'm not looking at all. Also EssilorLuxottica, 42.58, that's also a bit too high. And one that sticks out the most is TotalEnergies with a PE ratio of 7.8, an earnings per share of 7.97, a dividend of 3.16 per year, and a dividend yield of 5.08%. And the payout ratio is just below 40%, so when it's lower than 60%, that's totally great. So on this page, for me, TotalEnergies definitely sticks out. Then we go to the next 10, and there we have AXA, BNP Paribas, Vinci, Dassault Systèmes, Stellantis, Crédit Agricole, Danone, Saint-Gobain, Engie, Pernod Ricard, and here as well, only Dassault Systèmes with 41 and Danone with 40, and all the rest are actually pretty well valued with nice PE values. So I think the French market is definitely more, offers more opportunities to do great investments. Only Danone with a payout ratio above 100%, that's not great, of course. But maybe I made a mistake here in the EPS, I'm not sure, but I found the information on 3 different sites to be 155, so I should have checked for sure on the investor page of Danone itself, but you can do that for yourself definitely as well, because what I'm telling here, it's not financial advice, it's just all the data that I gathered and that I put together and want to present to you, because I think France, it's definitely a place where you can do great things on the stock market. Sadly enough, for people in Switzerland, We have double taxation on the dividends, so that's a bit less. But if you are living in France itself, man, you have great companies to put your money towards. So here as well, look at those PEs. There are a little. Legrand sticks out, Thales sticks out, but all the rest 19.65. Okay, it's above 18, but earnings per share of 9.54, dividend yield of 1.81%, and a payout ratio below 40%. Capgemini is definitely also a contender. Orange payout ratio a bit too high, but yeah, it's telecom, so that's always a bit high. Société Générale 9.7, so even below 10. STM or STMicroelectronics also below 10. Michelin definitely below 10, even below 5. But if you read up on Michelin, don't miss the fact that they have a lot of they have a lot of competition from Asian companies that are putting out tires like they are insects. So yeah, Michelin is having a tough time, but still, yeah, it's well valued, but with the uncertainty of how the Asian market is going to continue with putting out cheap tires on the market, it's risky to put your money towards Michelin, and all the rest of the market thinks the same. So rowing against the market in this case, it's a bit tricky. For banks, it's the same for me. Rowing against the market for a bank, I would then I would then prefer putting my money into an ETF that puts money into banks so that your money is really spread out. Putting it towards one bank, that's always a bit tricky. But yeah, STM, it's 8.39 right now with a dividend yield of 1.14, a payout ratio below 10%. That's also a good valuation. But yeah, semiconductors, it's a strange business. I'm as Osram. It's in that business as well, and yeah, it's not going great there. So microelectronics is struggling a bit too. The EPS is going down. So you have a lot of things to think about. And then the only one with a negative EPS is on the last page of the 40 stocks. It's Unibail Rodamco Westfield. It's a retail company, retail estate company, a real estate company, sorry for that, real estate company. And yeah, when your EPS is negative, and it's been like that for 5-6 years already, so it's not doing great at all. Even when they went together with Westfield, so Unibail Rodamco, when they went together with Westfield, it didn't change a lot. They are still putting out negative figures. They still pay out a dividend. I don't know how they do it. The payout ratio is negative for almost 6 years now. So yeah, it's definitely a stock where I wouldn't put money towards. So that's why I put it in yellow as well. And yeah, Teleperformance, it's a call center company, 9.49, payout ratio 36.95. So once again, really good valuation, but do you want to put your money towards a company that is dealing with call centers? I don't know, not me, but if you look at the valuation, it's really great. So do your own research, be careful, and put your money where you like it, but don't blame me afterwards. And then another one, yeah, Renault and Stellantis, two car manufacturers, also both with a low PE ratio. So Renault 8.5 with the payout ratio of below 40%. So also really good valuation, but car manufacturers are, yeah, on a bad spot, just like banks. So difficult to say whether or not you should put your money towards such a thing. Maybe look at ETFs that put money towards car manufacturers, because almost all car manufacturers except Tesla are pretty cheap right now. So maybe that's the way to go. Also, banks can be interesting to put your money towards an ETF that invests in a lot of banks. Then the 10 best stocks according to the PE ratio. So you see on the French stock market, you can really find stocks that have a low PE value. So all these have a PE ratio below 10. And you see Société Générale, BNP Paribas, Crédit Agricole. So three banks that aren't performing well because, yeah, banks are in a bad spot. Then you have Teleperformance. As I said, do you want to put your money towards call centers? I don't know. Then Renault, Stellantis, car manufacturers, not doing great. Michelin, a lot of competition from Asia. TotalEnergies in the energy sector, just like Engie. So pretty cheaply valuated. And actually, yeah, TotalEnergies and Engie, that's the most those are the most likely stocks that I would put my money towards. And then when you look at the payout ratio, TotalEnergies wins. So it's 39.65% of a payout ratio. So that's really nice. Also, dividend yield of 5%. It's really great. Engie is almost 9%. So that's nothing. Yeah, nothing to. How do you say it? It's a great dividend yield, and it's a great company. But of course, they have a lot of nuclear power plants, and they all need to be tore down once. And in Germany, there are some nuclear plants that are being deconstructed, and it costs a lot of money. So I think people are thinking about that as well. With TotalEnergies, yeah, you don't really have that problem. So why it is this low valuated, I don't know. And then we have AXA with a PE of 11.94 on the 11th place. So we make a jump from 9.7 to 11.94. And there the payout ratio is comparable to the payout ratio of Swiss Re, where it's 69%. And Swiss Re also had a PE ratio of around 13. So AXA is comparable to Swiss Re on the Swiss market. You have Swiss Life as well, and then the other one as well, but there the payout ratio was much higher. There it was 90%. And it was Swiss Life and Helvetia, to be correct. And then the 10 best stocks according to the dividend yield. So Stellantis offers a dividend yield of 10.24%, and with a payout ratio of 35.63%, it's nothing worrying. So it's nothing to be scared of that they can't maintain the dividend yield. So even a PE ratio of 3.48, so that's also incredible. But Stellantis, yeah, it's a difficult market, the car industry. So really read up on it and make the right decision if you want to put your money towards Stellantis. Then you have Engie, 7.89 of a PE ratio. The payout ratio there is 70.79%. So as I said there, my preference goes out to TotalEnergies. We have Crédit Agricole, BNP Paribas, and yeah, both are plus minus the same in the same valuation park. So you have around 7 PE, you have a dividend yield of 7.4%, and the payout ratio is a little bit over 50% for both. So there it's also up to you which one you prefer. BNP Paribas Fortis is also present in Belgium, so I know them. Here in Switzerland, they are in Geneva, I think, but for the rest, they aren't that active in Switzerland. Then you have Orange. So once again, it's it's in the telecom branch, so higher payout ratio there. Carrefour, it's a retailer. That's why I was confused with the other one there. So Carrefour, the retailer, PE ratio of 12.46 and a payout ratio of 74.36. But for retailers, that's also pretty normal. Then the building company, I don't know how you exactly pronounce it, but I'm going to try. So it's Bouygues or something like that. So sorry if I pronounce it incorrectly. Please correct me down below in the comments. Then you have AXA, so insurance company, and AXA is a company that I like. We have a lot of insurances ourselves at AXA, so maybe I would prefer that. And then we have Kering with a payout ratio of 82.64%, so that's a bit high for me. But on the other hand, it's a great company as well, Kering. So, and then 10 bus stocks according to the payout ratio. So there, microelectronics scores really great because it's a payout ratio below 10%. But as you know, the EPS is going down for that company, so that's a bit tricky. Eurofin Scientific, that's more in my branch where I work, so that's a payout ratio of 25.77%. P ratio, that's a bit high to my liking, but yeah, it's it's always possible that it comes down, so I'm tracking this one for sure. Dassault Systèmes, the P ratio is too high for me. Hermes as well. Stellantis, car manufacturer. Capgemini, for me, a contender, but still a bit high in PE value. Renault, once again, car manufacturer. Saint-Gobain, also in the building industry, glass industry. 36.91% payout ratio, pretty nice. P ratio also pretty nice. So this one, yeah, it's on place 5 or something like that on the French market for me. Teleperformance, yeah, not for me, and TotalEnergies for me on place 1, I think. Then the 15 best stocks according to the dividend yield and with a payout ratio below 60%. So here once again, yeah, I'm not going to say the same things, but here finally we also see Moet Hennessy, Louis Vuitton. So it does make it on one list at least. For such a great company, a PE ratio of 24.15, it's maybe a bit overpriced, but when you can pick it up at 2021, it's pretty good. And me, I like to wait until it's 18, 19, as I do with all the stocks actually that I buy. And when it's 18, yeah, then it's definitely a steal. So I'm waiting for that big crash, and then maybe I will pick up some Louis Vuitton. But yeah, you need to have money, of course, when that crash happens. Airbus, we haven't seen that one before, but for me, airway companies are not my liking. And yeah, the two that just fall out of the top 15 were Crédit Agricole and BNP Paribas. But as I said, those are banks, and then I prefer to put your money into an ETF. So is TotalEnergies the winner? Here you can see the evolution of the past 5 years. So this is what I like to see. It was more or less the same graph for BKW and what was the other one? So BKW for the Swiss markets, and the other one was, I lost it. I'm sorry for that, but you can check out my previous video about ranking the Swiss stocks, and there at the end you can see the two more or less winners from that video. And if my wife and I had money to buy stocks, it would have been BKW or BKW for sure. But yeah, we are a bit short on money, so we already have BKW on our radar for sure. And then is AXA the winner? So the payout ratio is a bit high, but as I said, it's comparable to Swiss Re. The PE ratio is a bit more favorable for AXA, and it is what you like more, and also where you live, of course, because taxes are also really important. If you are double taxed on your stocks, on your dividends from your stocks, then it can tip the scale into favor of Swiss Re or in favor of AXA. And then STMicroelectronics, I'm not sure whether or not I should mention it here, but they are really well valued, but the earnings per shares is dropping, and that's something you don't want to see, because when the earnings per share is dropping, most of the time also the PE starts to drop, and those two together make that you can have a quick drop in share price. Luckily for so for microelectronics, the PE ratio is already low, really low. So then the influence of the EPS dropping is only the fact that the EPS is dropping and not the two factors together. So that's something that you can see, for example, with Nvidia, where you have a high PE ratio. So there it was around 80. And then when they announce figures that are actually great, but not what the market was expecting, then the earnings per share isn't as high as they intended it to be. They also don't want to pay that much anymore for the earnings, so the PE ratio is dropping, and the PE ratio times the EPS determines then the price that they want to pay, and then the price can come down pretty quick. So this quarter, I think Nvidia is going to be safe, but once they really miss on earnings per share, you will see a quick decline in Nvidia, and that's why I don't touch stocks that are way high up in the price to earnings valuations. And with that being said, I thank you for watching this video. Please consider subscribing to my YouTube channel, hit that button down below. Also, hitting that like button helps out the channel, of course, because when you hit that like button, the video is distributed to other people that like this kind of content. And when they look at the video, maybe they want to subscribe as well. So Thank you for watching and see you on the next one on my YouTube channel. Bye!